Chapters. The following is a presentation of TFNN. The Tiger Technician Hour with your host, Basil Chapman. Call now, toll free at 1-877-927-6648. Now, Basil Chapman.
Good morning, everyone. Basil Chapman here, Tiger Technicians Hour on this Wednesday, day before Thanksgiving, November the 23rd. Let's see, this is quite a move we've got here. So within the context of, I showed the VIX index in the update. I was talking about the VIX is down at 21.23, 34.53 back on October the 12th, 21.23. I mean, that's over a 30% decline. But it's getting to an area that I've got to monitor closely because this is about where in the above the teens in the 2021 area. This is about where I anticipate there could be some kind of a pop to the upside, meaning that something happens in the market. We'll talk about that as we move on. Let's just run the numbers quickly because there's a ton to talk about. We're talking about the Dow going to a recovery high. The high so far today is 34,243. It's at 34,220 right now, up 121. The high that was made back in August was 34,248. Was it? Let me just double check here. 24,281. 281. So it's got quite a bit to go, another 40 points or so to go to get to that level. It's got until Friday because it's a weekly chart. Think of this V-shaped pattern. I love these V-shaped patterns. Ooh, talking about a V-shaped pattern, what was I looking at a little earlier on? Someone had asked me about it. Was your target hit? I think I've written it down somewhere. I'll find it. Let's just go through these. So the Dow, I've got this as a G/C in the Chapman wave methodology. Basically what it says is that because there was basically like a restart after that peak. It isn't the instant restart because it didn't occur within 3 bars. It didn't happen within 4 bars. But the MACD has been strong right up until now. It's still holding well. The green line's over the 14. In the 9-period moving average, it's really strong, but the price is getting closer and closer to the 9-period moving average, even though the 9 is well above the black, which is the 14-period moving average. Stochastic's still really strong at 90%. We were a little overbought, and that's why I've been saying for about 3 weeks now that we're going to see a choppy action with a kind of a consolidation happening after a huge move from the mid-October lows. And it's only the Dow, really, the general, has been leading the way, and the troops are really, some of them are struggling to keep up. But in the meantime, back at the ranch, a couple of things that are really important. If by Friday, we don't have to close above, I prefer if we close above it, but if we can get into just 1 point above the 3, 4, 7, let me just get this right because it's a little hard to see, 34,281.36 high of the week of the 19th of August. That'll be very, very good action because it says that in the arch formation, not only have we come back from being much lower, but we have now taken out major resistance on the left side. And that would suggest that this entire area between 32,500 and 32,255, which is the 14-period weekly moving average, that's your consolidation on any major turn down. And I've got to be ready for some kind of a pullback here. And one of the reasons is, look, this is a G/C. If it's a C, it means you should pull back and then make a nominal new high to go to a D, and then you've got to be somewhat careful because in the 4th highest peak in Chapman wave, that's where yellow light flashes. In the S&P, which is trading at, let's see, so the Dow is up 0.28%. The S&P is up stronger today, up 0.45%, up 18 at 4,021. Retackling this 200-period moving average. Let me talk about this because we retreat today since this is the last session of the week here at TFNN. Markets open Friday, but we are closed. I might or might not send out an update for subscribers on Friday. I usually do that on the Friday after Thanksgiving. We've sometimes even had a decent buy, which you wouldn't have got if you didn't get in. But we'll see. So here we are in the S&P. Look how important this 200-period moving average. It couldn't hold above it back in August when it went to the 4325.28 high, the 18th of August. And then it came down with a silent doji candle saying, whoops, be careful. Actually, that we had already shorted in the diamonds. We went to the DOG and we reversed that whole position, being on the long side, quite aggressively on the long side. Although today we did take about almost a 40% gain in a very tiny position off one of our longs in the Dow. So what we're looking at here is, within the context of these resistance points, the fact that this is the second time hitting the 200-period moving average since we were there back in August and haven't been there, gone all the way to 3491. Now we're at 4,021. This means there's a chance that we can go above it, but it also means that the 200-period moving average is coming back into action as a magnet line, and then either a repellent or a propellant line. So this is going to be really important. All the technicals are good. But look at the on-balance volume. It's kind of pathetic. Well, that could also be because it's lightened up because of who knows why. But anyway, it's not very good. Look at the QQQ, NDX 100, trading up 236, up 0.82%. Not bad. At 288.34. But look how it's lagging. Look how the Dow is back at the August high. This is it's not even at a 50% retracement. You can't have the general leading without the troops. It can do it for a little while, but not for long. Look at the IWM. This is a daily chart here on the left. 200-period moving average, strong resistance with tremendous resistance as it went above in August, and then it took a dive from 201.99 August the 18th. It just started this huge move down to the double bottom at 162.50, and then you got your cup formation turns into arch formation. But it really is struggling here. Look, the 200-period moving average at 180. Here it is, trading at 185. Not that good. All right, I'm using the daily charts now because it's a very important session today. We went to a peak B. Everything about the peak B said it looks more like a peak D, but it is a B. So treat it as a B. It means you should go to a C and a D. If you can get a stochastic holding above 80%, well, it hasn't. It's at 73%. So I'm looking at gold, and I think that gold is really struggling. When you think that the dollar, I don't want to go to the dollar just yet. I'm just talking about it. Look at that 200-period moving average. It's become a magnet, and now it's become a repellent. So this says to me that gold is still kind of struggling, that it's individual gold stocks that might move, maybe even the GDX. Let me just put the GDX up here. Look, that's right on the 200-period moving average. How important is that? Well, look at this. Look at the failure pattern right there back in June. Peak D, and then it plummets, couldn't even hit the 200-period moving average ever since it broke down back in May. So yes, it's becoming more and more important, and in fact, it's a magnet line. So that just says to me, don't think of shorting the gold at this point. There could be another pullback. I just want to get this done. Let's look at silver. The SI, silver is above, just above the 200-period moving average, trying to turn it into a propellant zone. But look how it keeps coming back. Is this a magnet line or is it not? I always say, just put it there. When you don't need it, you don't need it. High-grade copper. High-grade copper is got repelled at the 200-period moving average of the peak F. Crude oil. Crude oil is trading well under. It's down again, down 3 at 77.66. We've been talking about crude oil being in a pretty serious downdraft. I'll be back in a moment. Basil Chapman, Dow's up 98, S&P's up 17. We'll be right back. Every time the big pushes out, going to look at gas, natural gas as well.
If you're looking for potential trading setups in the stock market, then Rocket Equities and Options Report is a newsletter you should try. Tommy O'Brien delivers options and equity trades when the markets present them, using a combination of fundamentals and technicals. Sign up for Rocket Equities and Options Report today with a 30-day money-back guarantee so you have nothing to risk. For all the details and to start your subscription today, visit the front page of TFNN.com. TFNN, educating investors.
Are you looking for a way to consistently add winning trades to your portfolio? Tom O'Brien is here to help. Tom O'Brien has been successfully trading markets for over 30 years. A frequent contributor to TD Ameritrade Network and CNBC, Tom O'Brien founded TFNN over 20 years ago to help educate investors just like you. Tom's daily market newsletter, Market Insights, is published every morning when the markets open. to give you the competitive informational edge you need to succeed. These newsletters are packed full of Tom's advanced technical analysis and are geared to deliver comprehensive strategies for a successful portfolio. Get Tom O'Brien's newsletter, Market Insights, today, and try all of our products and newsletters 30 days risk-free with our money-back guarantee at TFNN.com. TFNN, educating investors.
Everything in the universe is governed by the Fibonacci sequence. This mathematical principle is responsible for everything from the most aesthetically pleasing artwork to patterns in the stock market. To stay on top of stock patterns you can take advantage of, sign up for the Fibonacci 24/7 newsletter at TFNN.com. When you subscribe, you'll get a weekly report from veteran day trader Larry Pesavento on stocks you need to pay attention to. And you can trust Larry's analysis. After all, he's got 45 years experience as a day trader. Larry will also provide daily charts, videos, and data on the key markets that he's tracking. Expect notifications from Larry on market movement you need to act on at any time. First-time subscribers also get a 30-day money-back guarantee. If you're not satisfied, let us know and you'll get a full refund within 30 days of signing up. Subscribe to the Fibonacci 24/7 newsletter today. TFNN.com, educating investors.
TFNN has launched the Tiger's Den. Hosted at Discord, TFNN has been educating traders for more than 20 years with live programming hosted by a variety of professional traders during market hours. The Tiger's Den, available to all tigers and tigresses for just $1 for the year. There's no catch or added costs when you join our community of traders. Sign up today and become a part of this educational community of traders. Just visit the front page of TFNN.com.
Call now, toll free at 1-877-927-6648. Internationally at 727-873-7618.
So I'm going to go, I will go to natural gas in a moment, but look, deer. I've been talking about deer and I've been saying something's different in this particular market. There are Cintas, which is overalls, uniforms, almost at highs, all-time highs. A Caterpillar, deer. Look at deer. I drew this in and I said, is this going to be a Chapman wave stalk leg formation where we've gone into an oval pattern? Now we're going to break to the upside. Been watching it closely today. It did go to an all-time high at 446.40. It's trading at 445.67 right now. Leg D in the monthly chart. Only a leg C. Whoops, let me double check that. 405.41, 406.02. So that's a continuation path. Leg C. In a beautiful cup formation, I've drawn this in. I said there's a good chance that we're going to get there before December to the 446.42 level. And now look at the daily chart. Look at all these techniques that I love to use. Here we go. And then we get rid of that. Deer, trading up, gaps up. Did it have earnings today? So I've got a technique that I call, it's a difference between A to B equals C to D. That's the lightning bolt pattern that's spoken about here at TFNN. Most of the hosts talk about it in great detail. I've never talked about it in that fashion because it's something, my concept of it is a little different. I talk about it as a one-to-one Chapman wave expansion, but it has to be in a parallel move. And it usually occurs, let me just do this, when you get some kind of a channel to the downside or a falling axe formation, and then it breaks to the upside. So look at this. It goes from the low back in July at about 280 or 70? 283.81. That was the 6th of July. Runs up to a peak ABCD. It goes EFG/B, but it turned, everything was, at that point, the technicals are starting to deteriorate, and it pulls back sharply, and it goes from this high of 392.93 over a period of a month and a half. It goes down to 328.62 on the 23rd of September. Then it starts a brand new move. Look at this expansion to the upside. That expansion said that it should get to the 348 area. Is that 348? No, I read that wrong. Sorry. It should get to the 436 area. And it should be a 1-to-1 parallel extension. Look at the way this, over all this time from September to November to today, look at the way it's parallel. Now, let me change the color here just so that you can see. Isn't that incredible? I mean, markets, that's what's so fascinating about them. So it's gone to a leg E, gap up in the daily chart. It's gone above the 1-to-1 expansion. This is the 1-to-1 parallel. It's got to be parallel. You've got to go in the same direction. And then it started to fade here, and then now it's gone right back. It almost would hit this line if it was a trend line continuing. So isn't that incredible? So what we're seeing is isolated areas. Look at this. STLD. STLD, am I correct? Yes, Steel Dynamics. Look at this. Steel Dynamics at an all-time high, also in leg E only a leg C in the daily, a leg D in the weekly, leg E in the monthly. What's going on here? What about, so let's skip that for now. I wanted to say that this is a very unusual market. The areas that have been stronger, many of them in the stocks and the ETFs are up in the 400s. Look at the Syntas all-time high, almost its all-time high today. Leg C, it's got another week, 2 weeks, 3 weeks, until the week of the 16th of December to get to the 461.44 high that was in December a year ago, exactly a year ago. So we'll see if we can do, and that's just saying that the market actually has been very strong. So I don't see what the Fed is going to be looking at that says to them, don't overdo the yield expansion, because there are some things that they might be looking at that really are still working well. Okay, so natural gas, I had a question in the den. Could I go through natural gas in great detail? Well, this was a very unusual pattern. The Groucho Marx eyebrows and everything. This got smoothed out, and I had to change all the notations. Look, you can see all these notations are down here. It's not automated. It's hand-driven by me. So that peak G right there, the G slipped down. I have to elevate it. I have to pick it up. I've already done that with these. Then I had an alternate count saying, if this is correct, there should be a flat base restart that takes you way underneath the lows that were made. Now, so what we're looking at is, natural gas has been, everything we read about says there's a glut of natural gas, or there's a hindrance because it can't ship enough, etc., etc. I was just looking at the chart, and I said, there's this Chapman wave inside track propellant zone. It's acting very poorly, but it's trying to make that a very strong support level. So we went long about 4 days ago, the UNG, which is the only way we can trade it if you're not playing the futures. The UNG is the natural gas United States Natural Gas Fund. It had already made a PD in the monthly, which is never a good sign. It failed in the weekly, one of the few failures we've had from a buy signal, or going to a G, you can never get an H. So that just says that P was a B or B minus, and it came down and made a lower low. So I was looking at this, and I saw everything that I looked at in the natural gas chart. We've already tried this once before. Natural gas, we took a small position, which we even split, so it was a really tiny position, and we took a loss on it because instead of going to a D immediately, it had this huge tumble back in early November. But I like the fact that the MACD was rallying. I like the fact that the stochastic was higher than it had been. I didn't like the fact that the on-balance volume wasn't very good, but it did make a V-shaped turnaround. So we went long. We went long on the 17th of November at 20.38. Today, and it had fabulous moves, and it gapped up 3 days ago. I liked the action. And then I said to subscribers this morning, I said, let's grab at least a tad off the position that we've got in there. And I said, take a tad off at 20, if it gets to 20, what did I say? 22.38. Take a tad off. Actually, some of you got a much better price than that, but I was very strict in these suggestions that I make for subscribers. So we took a tad off at 24.38, but it actually opened at 24.61, hit 24.63. Now it's trading at 24.21. So this is a leg D. in the UNG, it's not a leg G. I wanted to explain that the reason why I'd just be very brief about this in a position that we actually have, but in this particular case, it's worth it because of all the notations. So let me do this. Just natural gas has gone to a leg, very clear leg D in the daily chart. That's the natural gas futures in the continuous contract. The UNG had a peak C right here. I made it a peak C. So this is in the Chapman wave notation. If you make a peak B or C and then you pull back, if you are underneath that, I always put it in, I didn't have time. I didn't have time. I just didn't bother. I didn't change it to gray. But look, I made that a gray A and a gray B because it was underneath the previous high. And this new move up was a gray leg C, but the moment it takes out that previous legitimate peak C, it goes to the D. I always want to be ahead of the game. I don't want to call that a C. This is a D. So in D, we become a little cautious. That's the reason why I said take a tad off, and we'll talk about the potential for more.
If you want to take advantage of this sector, now is the time to subscribe to my Gold Report. The Gold Report is a comprehensive look at the metals sector as well as the markets that move gold, which is the currency and bond markets. New subscribers get a 30-day money-back guarantee, so you have nothing to lose. Every Monday morning, I publish the Gold Report with coverage of gold, silver, bonds, the XAU, HUI, GDX, as well as more than 30 different mining equities. To see for yourself the types of profitable trades that are recommended within the Gold Report, sign up now by visiting TFNN.com. Don't miss out on the next great gold trade. Sign up today.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, Butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Sharpening your skills as an investor is like getting better at playing a musical instrument. You have to practice, sure, but you also need excellent instruction from experts. At TFNN, you'll get advice and guidance from the authority in technical market analysis. And it's not just dry, tedious text either. TFNN airs live financial content streamed live on TFNN.com and TFNN's YouTube channel with Tiger TV, live every market day from 8:30 a.m. to 4 p.m. Eastern. For free. Each host is an experienced trader and gives their take on the market while taking calls and questions live from around the world. From the moment the market opens until the closing bell sounds, Tiger TV has 8 different shows with expert hosts to help you make the right moves with your money. Watch online at TFNN.com or on TFNN's YouTube channel and become the investor you were born to be. TFNN, educating investors.
This segment is brought to you by Thinkorswim. For more information, just click the Thinkorswim banner on the front page of TFNN.com.
Hi, folks. So we're talking about natural gas. We're talking about UNG, which is the United States Natural Gas Fund for subscribers real long. We took it like almost 20% in a few days. We had that. Once you get that, you've just got to take something off. Well, at this particular point, it's done the left side, right side price time match that I had drawn in for subscribers. There's your Chapman wave inside wedge target resistance line. It's gone above that. It's hit the left side 24.52 high that we were targeting as a potential, not even thinking that it could do it so quickly, back from the 6th of October, that high. I like what I'm seeing here. I like the fact that the price movement has gone from an arch formation to a potential cup formation in the weekly chart. But there's a lot of work that needs to be done. for the technicals and the weekly chart, the daily technicals are really good. Even the on-bounds volume is moving up together with the MACD and stochastic. But the weekly chart has a huge amount to do before the MACD turns positive. The stochastic is at 17%. It should really be at about 23% now. It's not. So there's a lot of work to be done. But if by today's Wednesday, short session on Friday, so that still counts as a day, Monday, Tuesday, if by Tuesday, the 23, let's call it, what was the high over there? It was 22. Let me just give you that. The high of the 7th of November, 23.32. If 23.32 has not been taken out, in fact, if 23.80 has not been taken out, let alone 22.30, that would be very good, especially if in the interim 3 days after today, that's Friday, Monday, Tuesday, there is a test of the start of this candle right here of 24.66. Today's high is 24.63. So if we can get into the 24.77, the candle of the 22nd of September, that'll be very good action. That'll say, regardless of what's been spoken about, the price says, winter is here, and the traditional rally in natural gas is unfolding. All right, that's all that I can say. And I'll just go one step at a time. So we've taken a little bit off. I might even want to add if it pulls back a little bit and I see it's holding, we'll see what happens. But in the meantime, that's what we've got. So within that context, you are long. The questioner said, I'm long the Boil, B-O-I-L, so it'll have the same chart. And all I would say is that I would do exactly the same thing. This is A, B, C. This is leg D in Boil. Boil is Pro Ultra Bloomberg. So this is an aggressive, I think this is the three times long natural gas, the USO. So I would manage my portfolio a little bit differently in this regard. There, I would definitely take just a tad off for money management, keep your core. But on a stop basis, if it takes out 55, right here, is that 55? What was the high of that candle? 55.42. No, I'm going to make it 55. If it takes out 55 support over the next day or two, I'd say, you know what, at a peak D, just be a little careful, maybe take another tad off. But in the meantime, it's acting extremely well. All right, enough with that. What I wanted to talk about is, so questions came in. A question came in about someone, Arnie says, you had spoken about Tesla being in a major sell-off because of Musk's lack of focus. Your target was the left side low of the monthly candle. I can't remember what the number was. It must be close. So let's just have a look. Tesla. So Tesla is trading up 9 at 179.35. Yesterday's low was 167.54. Little doji candle. So it says right here is about where it should bounce a little bit. So my target, let me just see if I can still, yep, there it is. Okay. You know, I talk about bar symmetry. I'm making a big deal over the last, ever since I've been here at TFNN. I had in my CD introducing the Chapman methodology, I talked about these beautiful arc or cup formations that have symmetry on the left side from the 90-degree vertical post, which I call the plumb line. Well, the peak E of 414.50 back in November of 2021 was right there with a long-legged doji, and then it had a Chapman wave Roman candle, the following candle. I said, watch out for that, because if we break halfway into the wick of that candle, we should be testing the low or even lower. Well, of course, we went even lower. But look what I did. I chose this particular candle of November of 2021, and I spoke about the candle after peak D. That was the March 2021 low of 179.83. And we were way up in the 300s. People said, what are you talking about? I said, all I'm saying is that I've got a left side, right side price time match. And over the last year, when I've been talking about his focus on Twitter or whatever, 8 months or whatever, his focus on Twitter, I said, terrible action. Where just like Salesforce, Salesforce.com, Benioff just lost his focus because he kept talking about all these social things. Hey, social things are fine, but you've got a business to run. And he wrote books and he did all sorts of things. And you saw what happened to CRM. Cream got creamed. CRM made a high of 311.28. Trading, he had 150. I mean, over 50% decline. All right, so let's go back to Tesla. So we've done that in exactly the number of bars. I like to go all the way, a bump against the cliff on the left side. So I said I'm going to the candle of the December of 2020. If I do that, there should be November or October or November should see a test of that level. Well, we've broken below it. So yes, you're absolutely correct. I completely forgot about that. I didn't even print it in. 179.83, 179. I said 181 to 176, if I remember correctly, was my target on the downside. Well, we've already hit 167. I don't think we're done for Tesla, but it could go sideways now. It could have a bit of a rally. So I'm just saying, be very careful. And basically what's happened with Tesla is the monthly chart has gone to a sell mode. And the weekly chart keeps making these arch formations that fail, and then they don't go much below the left side low, but they go below it, and then they can't get much above the left side low to rally above it. So all I can say is 193 to 200, and I'm not even sure 205 would be my upside target if there was a bounce at all in Tesla. But be careful, because if it takes that 165 support, it could go a lot lower. Okay, that's Tesla. Next question was, I did UNG. You remember TLT? I said in Chapman methodology, a buy signal going to a buy mode says it should go to a D. Today we got our leg D at 102.70, up 1.22, and that says the TNX.X, that's the 10-year, is testing in the arch formation, the dreaded H pattern. It's already had one at a peak B minus. And it broke and did a one-to-one, almost a one-to-one to the downside. And it says at 37.15, sitting at a peak D in the weekly chart in the TLT, the TNX, that's the 10-year T-note right now. We're looking at the yield decline. This is the yield, and we're looking at the 37.17, 3.717. And it says this is a very important moment, because if the Fed says we might have to raise rates again, then you're going to see a sudden move to the 30, from 37.17 to the 39s. But if they just say maybe 50.50 is going to be the target for the next meeting, maybe it slides. If it goes down to 36, I think that's going to also help the market. So with that said, we've got a break coming up. The next thing I want to look at was the SMHs. And as we go to the break, SMHs are really acting well today, up 3.5 at 225.50 on the 200-period moving average. I'll be right back. Basil Chapman.
You might think that if you want to be successful at trading in the stock market, you're going to need a crystal ball. After all, it's impossible to predict the future, right? Like any endeavor in life, before you decide it's impossible, get some advice from the experts. You might find that it's not so impossible after all. For daily market overviews that give you direction on the key indices, selective stocks, and commodities, subscribe to the Opening Call newsletter at TFNN.com. The Opening Call newsletter is written by Basil Chapman, creator of the trading methodology known as the Chapman Wave. The Chapman Wave up-down sequence gives you an edge in identifying price turns, finding the peaks and valleys in stock prices. Get the Opening Call newsletter by Basil Chapman in your inbox every day. First-time subscribers also get a 30-day money-back guarantee. If you're not satisfied, let us know, and you'll get a full refund within 30 days of signing up. TFNN.com, educating investors.
The technology around us is changing every day. With so much happening, it can seem impossible to keep up with all the information. David White's investment newsletter, The Technology Insider, is designed to give you all the information you need to understand the technology that shapes today's markets and tomorrow's future. David White has made his living staying on the cutting edge of technology. His weekly newsletter will give you specific recommendations for value tech stocks, as well as entry prices, target prices, and stops to set for each trade. Dave delivers his weekly newsletters every Friday with updates throughout the week. You can get the Technology Insider at TFNN.com for only $37.50. Sign up for David's newsletter, The Technology Insider, and get an inside look at everything the technology sector has to offer. Try it risk-free today with our 30-day money-back guarantee. TFNN, educating investors.
Biotech is booming, but for how long? Whether you think the biotech bull has room to run or has run its course, trade LABU or LABD. Direction's daily S&P Biotech 3 times bull and bear ETFs. Visit directioninvestments.com/biotech today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
This program is brought to you by Vista Gold, traded on the NYSE American and TSX under the symbol VGZ.
So just for a moment, I really wanted to do this today, and I missed the opportunity. I talk very often about a two-click session. What is a two-click session? We had that. Look, here's the 10-minute chart. Yesterday, was it yesterday? Yes. Yesterday on that pullback, right there, on the pullback, and then the rally at 7:10 in the morning on the 22nd, when you got a crossover that was positive in the 10-minute E-mini chart, that crossover held from the entry, let's give it the worst entry, at 39.64 at 7:10 yesterday morning until right there, 9 o'clock that morning on the 22nd at 40.10. I would say that's 40 points-ish. That's not a bad move. That's 2 clicks. And what happened was you go in and then you get out. But wait a minute. It did the same thing again this morning. This morning it crossed positive at 9:50. Early this morning it made a trough at about 8:50 this morning, but it actually got a good crossover at 9:50. And here we are on the 10-minute chart on leg C. It's a gain. It could be a 2-click day. I missed this. I just missed it because I was busy at the time doing my newsletter. And then after the newsletter, there were other things, being Thanksgiving and all, the family coming. I needed to do things. So I missed out there. But look, there's a rectangle formation. We've snuck above it. And it's gone to, in the 1-minute chart, it's gone to a peak F, pulling back a little bit. You know, the idea is that, yes, you can have lots and lots of little trades, but it's just fantastic. Over the last year, I couldn't tell you how many days there have been where either it was a short early in the morning and just it was 1 click, and then by the end of the day, you could undo that by clicking buy, or it was a buy. 2-click session. I love those. They don't happen all the time, but they happen often enough that it's worth having an modus operandi that allows you to at least get that kind of entry. So I'm working on a way to be able to describe it, explain it, demonstrate it, because you don't have to be trading the E-mini. It could be anything. It could be you could be aggressively looking at the SOXS, which is 3 times long, the SMHs, or the UDOW, which we're actually long, but as a trade intraday. It could be anything. So anyway, I thought I'd just talk about that. Since this is a leg right here, this is a leg C in the 10-minute chart. It should, because everything here is in a buy signal to buy mode. The stochastics at 89% in the 10-minute chart. MACD is still very strong. It's a tad overbought based on that 1-minute chart. I use 1, 2, and 5, and 10 as my watch and trading stocks that I trading time frames. So here it is in leg C. So we're going to pull back. Nice little dip back into the rectangle over there. Watch the rectangle. You know the rule of thumb. If it goes to D, E, or F above it, when it comes back, if it takes out halfway of the rectangle, which in this case would be 4027, it could zip all the way down to the low, which is down in the 420 area. But at this particular point, the technicals in the 10-minute chart are very strong. All right, enough with that. Question I had was SMHs. Whoops. Right here. Oh, got to get that sneezing. So look at the weekly chart. This is a really good rally. But wait a minute, we've done this before. Now, if I do a measured move, remember, I don't want to go through that right now, but if there's a measured move to the upside, it's basically saying that the buying pressure and the emotion is such that you can get this kind of a rally. And if it gets repeated, it could be the same, it could be smaller, it could be more, but it's the angle that's important. Look at the angle, exactly the same. And it's exact percentage, exact number of points to the upside. I should say percentage because the numbers change. But look, this is exactly the same, almost to the penny. So it says right here is really important because if we keep flowing to the upside into next week, that's going to be positive. Now, I need to talk about, just take a moment. I want to talk about it, about next week. Maybe what's the time? Yeah, I just got enough time. So in the den, yesterday, I think a couple of days ago, I said that I'll be talking a little bit about Walgreens boots because I liked it very much. We never got into it, even though I really liked it. Walgreens, Boots Alliance, drugstores. So the 200-period moving average was a target. It hit the target, and we have a couple of TFNN listeners who, one in particular, George, is always looking at this. And I've been mentioning that I liked it for a little while, and it's acting really well. But what's really important is that this high that was made in the weekly chart, in the week of the 11th of November at 41.57, saw 51.58 as a high last week, and now it's extending. So this remains a leg A. Isn't that incredibly strong? Look at the MACD. Stochastics almost at 80%, at 78%. I'm thinking here when you come to price, just inflation in general, I'm thinking that the chart might be saying that areas like a CVS, let's just go to CVS, that's CVS Pharmacy, what do they call themselves now, something else, CVS Health Corps, they're able to ameliorate some of those excesses, mainly through the drug part rather than the actual store with all the aspirin or whatever it is. I'm just looking at it and saying, hey, there's a possibility. So WBA, I've been talking about it for a little while, actually has a different chart pattern because it really got hammered. And it's the monthly chart of CVS is way better at 100 right now with 111 high back in February, I think, of this year. This is really not bad. When you look at WBA, that's a lot different. WBA. Yes, look at that. It made a high. So just as a laggard, playing catch up, I think in a sense, this is one that has a percentage, a chance of a better percentage gain than CVS, but CVS is actually the lead. I would prefer that as your call, but WBA is the catch up. WBA is at 41, so a different price instead of 100. But don't do it on price alone. This is a Chapman Wave instant resale. This is E, F, G/C, and now it's gone to the D. I just have too many Ds. I'm getting a little nervous about next week. I don't know what it could be. Could it be something overseas? Anything could happen. But I'm beginning to think that we are becoming a little, we're so, look, let me go through this again. The VIX index, don't type it on the chart. Type it right in the little box. There it is. VIX.X. 21.03. It's making the arch formation. It's below all the support levels in the Chapman Wave inside track propellant zone. It's now a major repellent zone. But I have to tell you, something says to me, be a little careful next week. I'll be right back.
Are you grinding in the market, but seeing little to no return? Or are you a successful trader, simply looking to make your job a little easier? Learn to take the path of least resistance with David White's powerful trading newsletter. David White is an accomplished trader whose deep understanding of technology and the markets allows him to consistently find and share winning trades. Support and resistance define the ranges in which stocks trade. By understanding these trading ranges, David White is able to find the path of least resistance. David White's trading newsletter, The Path of Least Resistance, is delivered daily before the markets open to make every trading day an easy win. Visit TFNN.com today and subscribe to David White's Ultimate Trading Newsletter for $119 a month and try all of our newsletters risk-free with our 30-day money-back guarantee. Take the path of least resistance at TFNN, educating investors.
You might think that if you want to be successful at trading in the stock market, you're going to need a crystal ball. After all, it's impossible to predict the future, right? Like any endeavor in life, before you decide it's impossible, get some advice from the experts. You might find that it's not so impossible after all. For daily market overviews that give you direction on the key indices, selective stocks, and commodities, subscribe to the Opening Call newsletter at TFNN.com. The Opening Call newsletter is written by Basil Chapman, creator of the trading methodology known as the Chapman Wave. The Chapman Wave up-down sequence gives you an edge in identifying price turns, finding the peaks and valleys in stock prices. Get the Opening Call newsletter by Basil Chapman in your inbox every day. First-time subscribers also get a 30-day money-back guarantee. If you're not satisfied, let us know, and you'll get a full refund within 30 days of signing up. TFNN.com, educating investors.
Everything in the universe is governed by the Fibonacci sequence. This mathematical principle is responsible for everything from the most aesthetically pleasing artwork to patterns in the stock market. To stay on top of stock patterns you can take advantage of, sign up for the Fibonacci 24/7 newsletter at TFNN.com. When you subscribe, you'll get a weekly report from veteran day trader Larry Pesavento on stocks you need to pay attention to. And you can trust Larry's analysis. After all, he's got 45 years experience as a day trader. Larry will also provide daily charts, videos, and data on the key markets that he's tracking. Expect notifications from Larry on market movement you need to act on at any time. First-time subscribers also get a 30-day money-back guarantee. If you're not satisfied, let us know and you'll get a full refund within 30 days of signing up. Subscribe to the Fibonacci 24/7 newsletter today. TFNN.com, educating investors.
This segment is brought to you by Thinkorswim. For more information, just click the Thinkorswim banner on the front page of TFNN.com.
Hi, folks. So, this is really tough. What do we do if we look at so many stocks that have had an extremely strong move over the last week or two? But you've got stocks as well, like an Amazon. Which is down at the lows, 188 high back in July 2021, down in the 93, the 85, 93 area. I haven't done Google lately. I haven't even looked at Google lately. Google acting a lot better, but still way at the lows, 152 down to the 84 area. Now it's at 98. Something's not right here. So I'm anticipating that we get some kind of, whatever it is, a reflex action that just says, at least momentarily, there's going to be some kind of a slide over the next week. It doesn't have to be next week, and it doesn't have to be very deep, just some kind of a rug pull, a sudden rug pull. It doesn't have to be, and I don't know how to play it because we have only long positions. I don't know what to do because you've got a leader in the Dow, so the Dow could pull back sharply but the others could be much sharper. So I have to think it through over this long weekend that we've got. For subscribers, I don't know yet. I haven't made up my mind yet whether or not I'll do a Friday, just a real quick, I might even just send one page buy or sell or to buy some puts. I don't know what I'm thinking at this particular point, because I need to see how we close. With the SMH is acting so well, that's the semiconductors, but not well enough to say they're leading. They're more following than anything else. And they've just done this one-to-one move to the upside. I just have to think it through. All right, all I'm saying is I'm becoming a little cautious here. I never expected it more than near term, but now I'm saying I just don't know, because there is definitely a lopsidedness. So I'm saying to everyone, have a wonderful Thanksgiving. Absolutely, this is one of my favorite holidays. There's no obligation other than to just enjoy yourself, enjoy your friends, enjoy your family, or even if you're by yourself, enjoy your own company. Have a great, great long weekend. See you on Monday. Check out the Opening Call Daily Newsletter. Stay tuned for the rest of the day. You've got book programming, Steve's coming up. Wonderful newsletter he has. I'll be back